Right now, the number one question we're hearing from clients is, the stock market is so crazy, what are we supposed to be doing now? And what investors are really learning is that not only has COVID changed the way we live our lives, it's also changed the way we are going to invest now and going forward. Well, first we have to realize that the market has dropped 34% in 34 days. While the market has recovered about 60% of those losses, most investors are still down for the year. And watching your stock market portfolio, your retirement portfolio, your 401k at work, watching that go down so dramatically, so quickly is unnerving at best. And the biggest question therefore is, what should we be doing right now? What should I be doing with my portfolio? There's such a huge disparity in that opinion of what we should be doing. And if you look, America is so divided on this, and really nobody really knows. It's not just your investments. The real question is, what is COVID going to do to change our lives? And so to answer the question, before you can really have a solid answer, you have to understand both sides of the picture, both sides of the argument, to really hear both people's opinions. On one hand, you have people who are so scared right now of this market, they're just not sure what to do. All they want to do is protect their money, and the last thing they want to do is suffer losses. They're just scared of this market. Why? We are 2 months away from the fastest 34% drop in the history of the stock market. We have this virus that is global, and there's no vaccine. There are 35 million people in this country that are out of a job. Housing starts have slowed. The companies we invest in are not making money. There's a lot of good reason to be fearful of this market. In fact, one of our own models, the multi-trend indicator, is at a 0 right now, following those same indicators. So many economists around the world are just downright bearish, and they're saying people who have gotten back into the stock market are actually setting themselves up for one of the greatest losses potentially in history. So they're very fearful, and that fear is at the highest levels of global economies. The International Monetary Fund has come out and basically said we are in the worst economic downturn since the Depression, and those are strong words. And that's the bearish side of this. You know, we could lose a lot more money right now. So I think it's a good point to consider, but we have to look at the other side as well. Right now, bullish investors are excited about a few things. Number one, our markets are finally coming out of bear market territory. And as I said earlier, we have seen a 60% recovery in our own US stock market. And so what investors are doing who are excited and back into this market, they're really focusing on this last 50-day period. If you look at this last 50-day period, the market has made great gains, great strides. In fact, so well, over 25-30% gains, that it is very unprecedented. It's only happened about 5 times in the history of the stock market. So these bullish investors are saying, well, in the past, when the market has gone up so fast in 50 days, even though we're still down for the year, what has happened in the past? And the reality is that in the past, when the stock market has jumped up so much in a 40 to 50 day period, we have seen gains. We have seen bullish gains 1 month, 2 months, 3 months. Standing here today, if we look at what has happened in the past, we can say that we would have a stock market which is potentially 40% higher than where we are right now. And that's what the bullish investors are looking at. So the question is, who is right? And as the smart money has found out, there are really 3 main points that all investors need to consider right now. So the first point that you need to consider is that the world has seen pandemics before and they've survived them. 2020 is obviously going to be bad, and the numbers show that. There's no way that 2020 is going to look good. It will be one of the worst years on record. However, the latest economic indicators show that 2021 is going to be huge, one of the biggest recoveries the world has ever seen. And so the bulls are viewing this as a short-term issue, but really they're looking at the long term. They're looking at 2021 already, and they're seeing growth. On the flip side of that is point number 2, and that is there are going to be some casualties. There are going to be some companies that do not survive. Not all 35 million people are going to get their jobs back. Why? Because those who are unemployed need to have companies to employ them. And if we're going to lose some of these companies, we're also going to lose some of these jobs. So investors need to be super hyper focused on finding good companies that have embraced this change. COVID has created change, and some companies are out there that have doubled this year. Some companies have found ways with technology or otherwise to thrive in this environment. Oppositely, we have companies that are literally on the verge of bankruptcy, and that is why we have to be specific in choosing the companies that we invest in. So when you're putting these 2 points together, very simply you get this. The days of buying a mutual fund or an ETF that is essentially a broad-based investment in the entire stock market, those days are over. Okay, why? Because as we just explained, that broad-based traditional investment with 500, 1,000 stocks in it is going to include some awesome winning companies that have embraced the change of COVID and are thriving. It's also going to include companies that are literally on the verge of bankruptcy. We have to be more selective. The smart money knows this, and you can't just dive in with both feet right now. You have to pick and choose your investments. So the best researchers in the business are taking half of their portfolio right now, and they're doing exactly that. They're being selective, they're buying the winners, and they're trying to avoid losers. Now, that means that they're taking 45, 50, even 55% of their money and putting it into cash, which brings me to our third point. So point 3 is this. In an environment where protecting assets is so important, the future state of the market is very unpredictable. Some investors have been finding that protected safety is an alternative to the stock market. What is protected safety? It's basically a term used for financial products which the issuer guarantees against loss of principal, which can be so important. But it also offers investors the potential to earn something more than they can get perhaps in a savings account, and in some cases much more. So in today's new world of unknowns, many investors are finding that this protected safety, these products, have become a large part of a portfolio. In some cases, we're seeing clients putting as much as 30, 40, even 50% into this bucket. And it gives them peace of mind is basically why they're doing it, but it also gives them comfort moving forward. And that's what protected safety is, and that is what the smart money is doing, and that's point number 3. So in summary, investors need to keep a few things in mind in today's changing environment. Number 1, we are going to get through this. We have to be cautious. Don't jump in with both feet, but we are going to get through this. Number 2, your exposure to the stock market needs to be calculated, needs to be specific. Try and find somebody who can help you pick winners and avoid losers. The traditional broad basket approach to investing may not make sense any longer. And point number 3, for that money which is not going to be in the market, which is going to be in the sidelines, look for some protected safety products as a complement to your overall portfolio. And as always, the most important thing we always have to do as investors is number 4, no matter what, find an advisor who is a fiduciary. A fiduciary is held to the highest standards. A fiduciary is an advisor that by law has to do what's in your best interest. If you follow these 4 basic steps, you will be good in today's changing environment.